Good day, everyone. Thank you for the opportunity to share today. The presentations you've been watching today all provide pieces of how Plug is focused on growing the hydrogen economy. I'm going to share how all these activities roll together into our latest financial outlook. Let me start with what we believe Plug will look like in 2025. The next 4 years will be a period of significant growth. We expect to grow to $3 billion in annual sales in 2025, which approximates a 50% growth rate from today. We are working to achieve a 17% operating income level, and we are targeting to achieve an over 20% adjusted EBITDA rate. We will solidify our role as a global hydrogen ecosystem market maker, well positioned for continued substantial growth past 2025. We're going to drive our vision based on 5 major building blocks. We participate today in a large global market that is accelerating the hydrogen economy. We have a broad product platform that's generated significant traction with key industry leaders. We're investing in capabilities to expand both our market and geographic footprint. We're driving the cost curve through overhead and supply chain leverage, design enhancements as we iterate through the exponential learnings, and vertical integration. And lastly, the green hydrogen network we are building will not only reduce cost, but will also support accelerated adoption on new applications. Our investments and activities are accelerating growth in the near term, which supports our long-term forecast. Our gross billings forecast of $500 million for 2021 represents approximately 50% growth over 2020. Given the momentum in the market and our investments, we expect to surpass $825 to $850 million in gross billings in 2022. That's a 60% annual growth rate over this year. We are ramping up our new gigafactory, developing the green hydrogen network, establishing our commercial platform in Europe, developing key partnerships like Renault and SK, and even expanding our core personnel, all to ensure the capacity and key capabilities to deliver our forecast. These factors drive the confidence in the $3 billion target for 2025 being very realistic. Now, one takeaway from today for sure is how in the next 12 months for Plug, it'll represent such a significant inflection point. We will be achieving substantial sales in markets outside material handling, with over 25% in revenues in 22 coming from electrolyzers, stationary, energy, and other sectors. We'll be establishing the first global green hydrogen network and prove this opportunity is today at cost parity with the carbon alternative, again another major milestone. And we will establish a substantial international presence with over 25% of our sales coming outside of the US, solidifying that Plug is now a truly global company. Our market penetration is growing in all markets. Now, Jose talked about our traditional market, material handling. This market continues to grow at a healthy rate in both units and sites. For 2021, we'll be approaching close to 60,000 units and 200 sites deployed. In 2025, we're going to be quickly approaching close to 200,000 units and over 500 sites deployed, just in material handling. Now, I only talked about our new electrolyzer market, which has enormous potential for growth. We're achieving substantial growth in 21. But more importantly, we are nurturing a substantial pipeline, and we expect to have greater than 250 megawatts in backlog by the end of this year. By 2025, we will have installed close to 3 gigawatts globally. And Keith and Andy talked about how a variety of other markets are taking off for Plug, including on-road electric vehicles, large-scale stationary, and aerial applications. We expect to see over 30,000 fuel cell systems deployed across all these spaces by 2025. For the green hydrogen market, you heard Sanjay discuss how we are building our network to more than 500 tons per day in the next 5 years. And as we move forward, we expect to continue investing in the global network. Where we're doing business represents a big shift for us as well. Our North American sales will continue to grow. We will be significantly expanding our presence in Europe. And we're getting a large foothold in the Asian Pacific region. This geographic growth represents a major opportunity for Plug. Fortunately, there are significant tailwinds that are driving the global hydrogen economy. We're operating in a favorable regulatory and social environment, and the global cost curves are benefiting from the escalating global market focus on green solutions. Let me drill more deeply into growth in our gross billings and how we're going to drive it. We expect our material handling business will more than double by 2025, and we have clear strategies to drive it. We've got a large account strategy with multi-site customer wins, which are proving now with our 5 pedestal customers. We're developing exciting new hydrogen solutions, which expands our market. We have flexible business models to make it easy for our customers to access our solutions. And we're continuing to invest in cost downs and improve reliability. For new markets, we anticipate a 50-fold increase in revenues over this planning period. To drive this, we're developing market channels, including industry-leading customers and strategic partners. We'll be leveraging metal plate stacks that will bring improved power density at lower cost. And we will be expanding markets like on-road EV, stationary, power, and aerial applications. And as you know, our green hydrogen market is really poised to take off. We expect to see a 650% increase in gross billings as we develop our market channels and grow our customers and partners, leverage the global market for electrolyzers with our superior technology, and scale the Gigafactory in Rochester, New York, and also scale our global green hydrogen network. In terms of our targeted business model and what we see as we scale to $3 billion in 2025, we expect gross margin to exceed 30%, and we expect to achieve low teens leverage on our operating cost base. We have seen how scale matters over the years, and we expect this to continue as we drive improvement in conjunction with other key drivers, including continual innovation, improving product performance and reducing cost, vertical integration, reducing lead times and driving cost synergies and improving product performance, supply chain leverage, driving cost downs and improving performance, and lastly, leveraging our OpEx as we scale. Now, near term, we expect to increase OpEx investments given the breadth of growth opportunities unfolding, which spans many markets and geographies. However, we see tremendous leverage opportunity as we scale in this longer-term planning horizon. Now, drilling a bit deeper into our gross margin target, it boils down to 3 things. Effectively, across our markets, we sell equipment, service, and fuel. And we see big opportunities for improvement in each area. Our higher volume in equipment sales will mean better leverage of fixed costs and supply chain pricing. Vertical integration will increase reliability and reduce cost. Technology innovations are simplifying equipment designs. Service improvements will include increasing reliability and reducing costs with stack enhancements, utilizing analytics for predictive maintenance and performance improvement, and leveraging labor as we cluster customers with a dispatch model as we scale. And our fuel business margins will improve with infrastructure design improvements that increase site efficiency and lower cost, and the implementation of our hydrogen generation vertical strategy, which yields synergies on costs we're paying others, and also affords tighter control of the network, which will significantly enhance our system efficiencies. And we've achieved 35% plus quarterly gross margin rates on equipment in recent years. And while this will vary going forward as we scale new products and new markets, we've demonstrated our ability to cost down and achieve our target rate, and we plan to routinely achieve this in the near to midterm. The real key, as we've shared, is driving service and fuel costs down. Both will significantly improve over this planning horizon. Target reductions in monthly unit service costs over 60% will come with improved stack life from new designs, newer models in the fleet as we grow sales and customers refresh their fleets, standardizing and streamlining customer offerings, and enhanced digital diagnostics enabling improved predictive maintenance. We anticipate fuel costs will more than be cut in half because we'll own our own capacity as we drive towards 500 tons per day in 2025. And we'll invest in logistics capabilities to streamline processes and improve field dynamics. And we'll leverage vertical initiatives for CapEx reductions. And that all adds up to improved operating income and operating cash flows. In this planning horizon, we're targeting 17% in operating income and more than 20% in adjusted EBITDA. Now, how do we achieve these targets? We'll do it through sales and operating margin growth, like we've been talking about, developing and leveraging our supply chain for more effective working capital strategies, and using our financial growth and asset platform to drive more efficient cost of capital solutions. In 2014, our breakout year, we were at $64 million in annual sales. During 2015, we predicted we would grow Plug to $500 million annually within a 5-year planning horizon. In 2021, we're achieving that milestone. Plug is proving we know how to grow this hydrogen economy. There are plenty of positive tailwinds as we move forward. And like the last 5 years, there will be some unexpected headwinds in our future. But we know the market opportunities are real, and the Plug team has clear plans to accomplish our growth targets. And we have plenty of near-term factors underpinning our confidence. We're scaling with over 50% growth in sales next year. We're growing internationally and entering new territories. We're continuing to grow our established material handling market while expanding significantly into new ones like electrolyzers, on-road, and stationary. And we are in the construction phase to launch the first global green hydrogen network, which will deliver at cost parity or better to the existing market next summer. To wrap it up, let me say I look forward to sharing more as we move forward. And I especially look forward to our Investor Symposium in 2025. We will be celebrating with you all that we've accomplished in these next 5 years. And given success begets success, we will all be discussing how we are poised to achieve similar, if not even better, growth rates in 26 and beyond. Thank you for your time, and stay tuned.
Boy, what a day. You know, I so much enjoyed hearing from so many of the outside distinguished speakers talking about the future of hydrogen. But quite honestly, I really enjoyed more the talks by the Plug Power team, who talked about how that future is actually here today. From Sanjay Shrestha, you heard about our green hydrogen network, where we'll have 500 tons of green hydrogen across the United States by 2025, the first of its kind, and by 2028, 1,000 tons around the world. Uli Hoffman talked about the huge ambitions and opportunities in the electrolyzer business. In that business, Plug Power has a leading edge technology which gives us a differential advantage against all the competition. Keith Schmid talked about a wide range of applications using one platform that allows us to address on-road vehicles, stationary power products, and even flying in the air. And boy, you can't forget Jose Crespo. Jose's the guy who's built Amazon for Plug Power and is looking to really build our material handling business even more rapidly. This was quite a day, and I know you're out there that you're looking to give us some questions, and we look forward to answering those questions. So please, fire away.